Good morning. I am coming to you live from Bloomberg, where I just got off Bloomberg TV discussing the consumer price index data and the trade situation between the U.S. and China. First, let's talk about the CPI. CPI came in line with expectations at 2.1% for core and 2% for headline. It's that core number that the Fed looks at, and when we look deeper into the data, what we see is an increase in housing costs, both rent and ownership, and this is something the Fed is going to be looking at closely to confirm that the economy is on a steady path. When we think about the trade impact, of course, if tariffs get implemented, this will be a tax that is paid by U.S. consumers, and it will mean that CPI will go up probably 3 or 4% when all is said and done. Now, the Fed is likely to, quote, look through this because this increase in CPI is not going to be due to an increase in demand, but is going to be due to a shock from the tariffs, and it will actually have the aspect of diminishing demand as real incomes fall and prices rise. So even if CPI rises as a result of the tariffs as we expect, we do not expect that alone to cause the Fed to change their stance from a patient stance where they are in wait-and-see mode for most of the rest of 2019.